Assalamu alaikum and hello. My name is Zishan Hassan. I'm the tutor of Advanced Audit and Assurance. I'm teaching this subject from last more than 8 years now, and various my students could had a distinction in this paper. Well, the agenda of today's session is to look at the area of advanced audit assurance, that is audit risk, right? So, firstly, um, let me define you that what is audit risk, right? So audit risk is the risk that auditor might provide inappropriate audit opinion where financial statement is materially misstated. Okay. So remember in the examination, you do not need to explain any of the audit risk. You do not need to explain what is control risk or inherent risk, detection risk. Examiner already knows them, right? Examiner already knows that what is audit risk, what is inherent risk, control risk, detection risk. And in examination questions, you already you're communicating, you're writing a report to the audit partner. He already knows them, right? So what you have to do in the examination, you has to explain with the explanation of no, with the you have to explain that why it is audit risk, control risk, or detection risk with application of this scenario. That means you have to connect you have to connect the issues with the scenario. Then you explain has to explain the relevant accounting standard or the issue and connected with after connecting it the scenario, you have to explain it that why it is the audit risk in with that aspect, right? That's what you have to do. If you explain it, you if you do if you explain sorry if you explain it only and you do not connect it, sorry, you do not connect with the scenario, you may get half a mark. Remember that. Okay. So what's the exam technique then? What's the exam technique? Well, first, identify the audit risk. Then connect it with the scenario, explain the relevant accounting standard, explain what's wrong in the scenario, then explain if not corrected, what could be the implication or issue, what could be the implication or audit risk. Okay, now in past, you guys may have heard that you will get generally 3 marks for each audit risk, right? And examiner already stated that mostly students examiner, let me explain over here. Examiner in the recent examiner report stated that candidates assume that for each audit risk there are 3 marks. Further, examiner stated that that this is not always the case. Sometimes one or more audit risks do offer more than one, more than 3 marks in it. Okay, so it's not necessary, but generally, yeah, there are 3 marks per audit risk, or even less than 3 marks as well, right? How? Let me explain. Now, what's the scenario here? In with respect to how you can get 3 marks, first you need to calculate the materiality, then accounting treatment. What is accounting treatment? Then the impact or the audit risk. That will help you to score 3 marks generally, right? But sometimes you will get only materiality to compute. You may not get the materiality to compute. You have to explain the audit accounting treatment or the impact or the impact of the audit risk. There you won't get 3 marks, you will get 2 marks. And how you can get more than 3 marks? Sometimes one specific paragraph contains more than one accounting implications or issues in it. So you have to explain those to get more than 3 marks. I hope you get it. Till here. Further, let us find out about what is business risk. Okay, so business risk is the risk that uh, an entity may not able to achieve its objectives due to operational reasons. Okay. Um, what are the examples of it? Change in legislation, change in change rates, change in tax rates, obviously adverse one. Okay. Political factors, natural hazards, etc. So here are the few examples of. Now, what we will do, we will move to the past paper uh, of March, June 2021 attempt, and we will look at in detail that how to attempt the question of audit risk area. Okay. Well, I will suggest that first do look at the complete question first, and then start doing drafting your answer, because many factors, many areas are connecting each other in the question, right? They do impact each other in the exam question. That's the reason that you should look at the complete question. So here is the two audit manager from Harvey Rabel's audit engagement partner. Uh, Audit engagement partner, subject audit planning for Pale Info. Hello. Now, uh, so here is the question from the beginning. It is 1st July 2005. You are manager in the department of chef and co-firm of chartered certified accountants. You are assigned to the audit of Pale and Co, which has a financial year ending 30th September 2005. Then they are telling us about all the exhibits which are time wasting to read, remember, because we can look at them later in this scenario as well. Now, so straight away, let's move to the this part. Respond to the instructions in the email from the engagement partner one. The split of the mark is allocated in exhibit one partner's email. So move over here and see. To audit manager from Harvey Rebels, audit engagement partner, subject audit planning for Pale Company, date one, 1st July 2005. Okay. Uh, I have provided you with some information which you should use to help us you in planning the audit of PALCO for the financial year ending 30th September X5. Oh, and currently it is 1st July. So 3 months prior to the audit planning we have, which is normal. As you know, Pale Company is a new audit client of your firm, of our firm, right? I hope you are looking forward to working on this interesting new client, which is the first timber company we have secured as an audit client. You should also be aware that the management team is planning for Palco to achieve a stock market listing within the next 2 years. Okay, they are looking for the stock market listing in the next 2 years. We found another thing. Now, I require to prepare the briefing note for my own use in which you evaluate the business risk to be considered in planning the audit of failed company. 10 marks available over here. Evaluate the audit risk to be considered in planning the audit of failed company. 20 marks over here. Overall, 30 marks for business risk and audit risk. Uh, Other requirements we are not looking at the moment. We'll do it in another session. Pale company owns and manages several large timber plantations. Approximately 85 of the trees are harvested each year. The company immediately processes the timber which is harvested from felled trees in its own sawmills facility where trees are processed into logs and other timber products. The processed timber, which is mainly logs and planks of wood, is then sold to a range of customers, including construction companies and furniture manufacturers. Approximately 30% of the timber is exported. Okay. Your firm was appointed auditor to the PALCO in March X5 following the resignation of the previous auditor. Here, associates as part of your firm's client acceptance procedures communication was received from here. Associates indicated that their reason for resignation was due to the retirement of the partner responsible for the audit and they had no issue to bring to your attention regarding the audit. Okay. Pale company has a small internal audit department with two staff to report to the company CFO as the company does not have an audit committee. Okay. Then moving on further, accounting policies mark your confirms that Palco applies the requirement of IAS 41 agriculture as follows. Stating timber, which means trees which are growing in the timber plantation prior to the being felled, are biological assets measured at fair value less cost to sell. The change in fair value less cost to sell is included in P&L for the period in which it arises. Field trials are produced which are measured at fair value less cost to sell at the point of harvest. Immediately after selling, the trees are processed so that the value of the felled trees awaiting processing is minimal at any point in time. Processed timber such as logs are measured in accordance with IS2 inventories. Technical expert from the audit firm has confirmed that the accounting policies outlined above appear appropriate in the context of pale company activities. Okay. Now, pale companies operations are currently all based in home jurisdiction. However, the board has recently approved the acquisition of several larger areas of tropical rainforest in Farland, a remote developing country. The expansion will allow the company to process a new type of timber for which there is significant demand from luxury furniture manufacturers. The acquisition of the areas of the rainforest will cost 25 million and the purchase is due to take place in 2005. The cost of 25 million is equivalent to the fair value of the harvest. Fairland uses the same currency as Pale, so the expansion is not creating any foreign exchange risk exposure to the company. Okay. The purchase is being funded through the share issue to existing and new shareholders who are mainly family members of the Pale family who established the company 20 years ago. A share issue was only the option for the funding the international expansion as the company is at the limit of its banking borrowing agreement. An international development agency has agreed to provide a grant of 20 million to assist the Pale company in the Farland expansion on the condition that the expansion represents sustainable and ethical business practice. The grant is provided specifically for the training the local workforce and building accommodation for the workforce in town near to the rainforest. The grant is due to be received in September X5 and relevant expenditure will commence in November X5. Mark York is planning to recognize half of the amount received as income in this year financial statements. On the basis it will cover some of the management expenses in planning the international expansion. The company is proud to have recently been awarded an industry gold standard accreditation for its sustainable timber management to achieve the gold standard, which denotes the highest possible level of sustainable timber management and ethical business practice. The company must adhere to a number of strict standards. This includes maintaining the biodiversity of the timber plantation, ensuring rare species of tree are not harvested, and that animal habitats with the timber plantations are preserved. To maintain the gold standard accreditation, one condition is that at least 80% of timber sold must be harvested according to the strict standards set by the industry regulators. The gold standard applies to all of the company's activities holding the farland expansion. Okay. Now, contract with Royal Company. The company's revenue has increased this year largely due to its strong, significant contract with a new customer, Royal Company. The contract was signed on the basis of Pale Company receiving the gold standard accreditation for its timber. It's the important point, by the way. Now, legal case. A group of employees recently commercially commenced legal action against the company, claiming that the breaches of health and safety guidelines regularly take place. The company has made some redundancies this year, which was put pressure on the remaining staff to the work harder or to maintain productivity. The employees are alleging that this has caused an increase in the number of accidents at work. Okay. At work, some of which have resulted in fatalities. The company's management and legal advisors believe that the legal claim, which amounts to 19 billion, is unjustified and will not be successful. Mark York does not intend to recognize a provision for the claim or make any disclosure in the financial statements in relation to this issue, as it is at such any early stage in the legal proceedings. Well, in this para, see, you are getting the business risk as well as audit risk as well. Uh, and earlier as well. Now, use of expert, change in fair value due to recent storms. In the last month, several storms caused damage to some areas of timber plantation. An independent expert has been appointed by management to determine the extent of damage caused and to quantify any financial implications, including determination of the change in fair value of the standing trees which have been damaged by the storm. The experts report indicates a large number of trees have been completely destroyed and many have been badly damaged. Based on the experts report, management has determined that a reduction in fair value of 70.5 million should be recognized in respect of the timber plantation and as recognized in the statement of financial position. Now we have some key performance indicators, KPIs. KPIs. The information in the table will publish as part of the annual report in selection titles, key result for the year, which forms the part of the management commentary, blah, blah, blah. Okay, we have some results over here. As you can see, revenue changes by plus 5.5%, operational profit 4.8%, PBT by plus 30%, social environmental key performance indicators 82%, 85%, number of employees 1300 and 1420, total staff days lost due to accidents at work 78 and 65, total assets 550 million, timber plantation, this amount relating to standard timber is before accounting for any change in value caused by the recent storms referred to in exhibit 3. Inventory 15.4 million and X4 9.2 million. The increased level of inventory is explained by the management as follows. The last 2 months in industrial action at the country's ports means no containers of the processed timber. The missed export sales so far amounted to about 2.1 million. Cash 4.5 million, 6.8 million. Cash levels are depleted this year due to inflationary pressure and demand for higher wages from employees. Now, last exhibit. Note from a food call yesterday between Harvey Rebus, audit engagement partner, and Mark York. Request from Mark York. Pale company publishes a wide range of non-financial, social, and environmental key performance indicators as part of the annual report, including the three shown as part of Exhibit 4. Mark has asked if our firm can provide assurance on these KPIs as part of the performing the annual audit. Mark has suggested that in to pay this extra work, the agreed audit fee will be increased by 20%, assuming that the assurance provided in the KPI is favorable. Finally, Mark informed us that a news report has emerged in Farland alleging the Pale company paid a government official a sum of 15,000 in order to secure the purchase of tropical rainforest, which is taking place next month. Mark wanted to make us aware of the story, which is spreading quickly on the social media, and to inform us that these incentives payments are routine business practice in Farland. He also strongly urged us not to investigate the payment as part of our audit procedures, saying that the amount is insignificant. He suggested making inquiries regarding the payment might mean more media attention is focused on the issue, which he is keen to avoid, giving the company's plan to obtain a stock market listing within the next 2 years. Right, now we're moving to our uh, word sheet again. And firstly, what we have to do simply to number one is our briefing notes, right? Two, the partner name was Harvey Rubus. Audit engagement partner. From audit manager. Okay, subject. Audit planning in relation to Pale company. What's the date? 1st July 2005. Now, introduction. Well, see, here's a technique to just second. Yeah. Now, introduction is our first heading. What we'll say. See, these briefing notes includes moving back to the question. Okay. This briefing notes includes evaluation of business risks to be considered, comma, what's the next heading? Evaluation of the audit risk to be considered, considered in planning of a company, comma, principal audit procedures, principal audit procedures in relation to change in fair value, change in fair value of timber plantation, further, sorry, further, this briefing notes includes um, includes ethical implications and other audit planning issues which arise from the uh, phone call of Mark York, right? That's how you need to write the briefing notes. Introduction. Now, first requirement is related to the business risk. Part A, business risk. Now, what's the first business risk? We identified international expansion. Remember? Now, the expansion into far land introduces a business risk in that the company will be managing operations in a foreign country for the first time. Far land is remote, so it may be difficult for pale company management to plan regular visits to the new operations. So establishing robust management oversight and controls could be difficult. Okay. Also, Parliament may have different laws and regulations compared to the company's compares to the company's home jurisdiction. So there is a increased risk of uh, there is an increased risk of non-compliance. Even the type of trees growing in the rainforest will be different, and management may not have experience in their harvesting, processing, and the sale of timber products. All of these issues create a risk that the international expansion may not be successful, and the same time will represent a drain of management time and resources. So that's it for this part. Uh, Other point which we identified was related to gold standard accreditation. So there is a risk that gold standard accreditation, uh, just a minute, there is a risk that gold standard accreditation may not be renewed, with implications for reputation and more specifically for the new contract with Royal Company, which largely account for an increase of 5.5% in the company's revenue. 5.5% in the company's revenue this year. Several of the key performance indicators, KPIs, which need to be met to retain the gold gold standard, seem to be in jeopardy. For example, there has been a decline For example, there has been a decline in the percentage of timber which is harvested in line with gold standard requirements, and the projected metric of 82% is only just above the required level, is just only above the required level of 80%. The gold standard is linked to the, you know what, linked to the ethical requirements, sorry, ethical business practice, and there are some indications that the business ethics are questionable, that some business ethics are questionable. For example, the legal case being brought by employees and the incentive payment made to government official, and if the gold standard accreditation is lost, Royal Company and other customers may cancel contracts, which will result in loss of revenue and cash flow. Now, so far so good. We got 4 marks from the business risk, and we need 10 marks. Now, the next one is the legal case. The legal action against the company by its own employees is a significant risk if the issue becomes the public knowledge, then there will be a reputational issues as well. And the amount which is being claimed, how much? $19 million exceeds the company cash balance. If the legal claim were to go against the company, it would struggle to find the funds. To pay the damages. Damages, given that it is already at the limit of its at the limit of its borrowings. Arrangements. The situation could also indicate poor governance of the company. If decisions are being made against the company, if decisions are being made against the company, Yeah. All right. That's enough till here. Now move ahead. After legal case, another point to discuss in business risk is damage to assets. Oh, damage to assets caused by storms. So we had 6 marks. Now for the fourth mark, let's the recent storms. The recent storms have caused significant damage to the company timber markets, plantation, asset, unpredictable weather patterns could cause further harm, further harm, or even totally destroy the companies. Destroy the company's timber plantation. Assuming that, assuming that trees will be replanted to replace the damage caused by the storm, it can take many years for trees to grow to a harvestable size. So the company faces a significant so the company faces a significant depletion of its future cash inflows for years to come. So far, so good. Now, so far we got the 8 marks, right? 2 marks each. And now the last one, we'll be discussing industrial action. So, The industrial action at the country's ports has been already meant lost sales, and as explained above, there is a risk that revenue and cash inflows will continue to be negatively impacted. Export sales account for 30% of total revenues, which is 12.75 million dollar, 12.75 million. Okay, making this a potentially very significant issue should the industrial action should continue. Customers may begin to look elsewhere for their supply of timber, leading to cancelled future orders and contracts. So that's it so far for the part A. As you can see, I wrote 5 business risks, and there is no rocket science. But what I did, I just use my knowledge connected to the scenario and gave my what it can what how it can give rise to a business risk, what type of business risk. That's what I did explain. No rocket science, just connecting it with the scenarios. That's it so far. Right now we have another requirement to look at in this session, and that's part B, evaluation of audit risk. Evaluation of audit risk. So, evaluation of audit risks. Um, First issue, as we are considering audit risk as per the requirements, a new client. That is our detection risk. How? Let me explain now. Oh, sorry, control B. Control B. Okay, this is the first year in which Chief and Company has audited the company, which increases the detection risk as our firm does not have experience with the client. Experience with the client, which will make more difficult to detect material misstatements. For also, there is a risk that opening balance and comparative information may not be correct. The prior figures were not audited by the prior year figures were not audited by Chief and Company. Therefore, we should plan to audit the balances carefully according to the relevant auditing standard. See, there's not necessary to mention the international accounting standard or international standard of auditing number or name. Okay. Now, with this, we get 2 marks, right? Because as there was no materiality was computed over here, so we got 2 marks for it. Next issue, or you can say audit risk, is regarding the corporate governance. So let us discuss about it. The company does not have to comply with corporate governance requirements as it is not a listed entity. However, it is a good practice to have an established audit company especially for a large company like scale company which is seeking a stock market flotation in the relatively near future. The internal audit team is small and lacking in independence as they report directly to the CFO. CFO. This means that the scope of their work scope of their work is likely to be quite limited due to insufficient resources. And any recommendations made could potentially be ignored by the Mark York. So far, so good. This has implications for controls over financial reporting. Sorry. Uh, uh, just a second. It's getting it on non-respondent right now. Okay. Controls and financial reporting.